up, everybody? Happy New Year! Monday, January 4th, 2021. We made it. And hopefully it's going to be a better year, man, because, woo, what we just went through. All right. Well, we started off on a kind of a negative note, but don't worry, everybody. Nothing has changed. And as a matter of fact, we're going to get pumped up some more with another round of fiscal. As you know, the COVID-19 relief bill that was passed, in the latter part of December, that's going to start hitting up in the numbers, and it's going to hit up in the economy. I mean, people are going to get extended unemployment benefits, the $300, the $600 check, the $300 supplemental. Now, I know we need bigger, and there's a lot of people hurting, but as I've been saying all along, I'm talking about from a market perspective. I'm talking about from an economic perspective, at least in terms of how the economy is operating now and how it will operate with the additional jolt of fiscal transfers. All right? So it's going to be bullish. So this pullback, again, the market gives you opportunities to get in. Now, you probably read a lot of stuff about it being a bubble, about it being, looking like 1999, 2000 with the dot-com bubble. There is a big distinction between now and back then in 1999, 2000. Back then, and I think I talked about this, I'm pretty sure I made a video about this. Back then, Clinton was running, but the government was running budget surpluses. Now, budget surpluses are the opposite of what we have been experiencing. The only way for the government to run a surplus is it has to tax more than it spends into the economy. So it is a net drain on income and savings. What we have now is the reverse. The government is running huge deficits, and a deficit means it's spending more into the economy than it is taking away in taxes. That is a net addition to the non-government. In other words, the non-government's financial balances, that's us, all right? Not all distributed equally. I have to say that every time. But the non-government's financial balances go up when the government runs a deficit. Now, we didn't have that in 1999, 2000, so the market was very vulnerable to a collapse. I mean, it just did not have the fiscal support, and that's what happened. I mean, it was easy to pop the bubble back then because you just did not have the level of fiscal support like you have right now. So that is a big distinction. Oh, by the way, you see I got a haircut. That was it, because some of you were saying, hey, look at this long-haired hippie guy. I got a haircut. That was a big distinction from what we are experiencing right now. Tesla, and let me make a remark about Tesla. I've been in Tesla now for a long time. I've advised a lot of people, recommended Tesla. Tesla, as far as my analysis goes, the stock is fully valued. That doesn't mean it's going to crash. And when I say fully valued, I think the stock reflects, and it jumped today. It jumped because they did fourth quarter vehicle deliveries of 180,000 vehicles. That beat Wall Street expectations. They did just under 500,000 deliveries for 2020. I think it was 499,550 vehicles delivery, so that beat expectations, although everyone was looking for that 500,000 number, but you just missed it by a tiny bit. It was a good number. But by my calculations, the stock reflects 2.5 million annual vehicle sales, which is what Elon Musk said he's shooting for 2022, 2023. So I think it's fully valued. That doesn't mean it's going to crash. that doesn't mean it's going to collapse. And as a matter of fact, if it goes down, it's a buy. But I think right up here right now, it's 750, 730, 725. To me, that's fully valued. What else? The dollar. The dollar continues to go down. Now, one thing interesting about this dollar move, and I've said this before, is that, you know, it's going down in a kind of a hesitating fashion. I'm sure there are a lot of people out there who think, oh, this is the bottom, this is the bottom. There are a lot of bottom pickers. Let me just once again explain to you. It's about fundamentals. It's about basic conditions. And the dollar is in a downtrend. It's going to continue to go down. You have to sell rallies. If you're looking to pick bottoms, you're not going to make any money. This is a classic bear market when it looks like it's always about to turn around. And when you get these rallies, you know, a lot of people get all excited and like, okay, that's the bottom, they're jumping in. That's a bear market trap. So the dollar's going to go down, and look at what's happening to gold. We had a 3% rise today, and gold rallied up to like 1940, 1945. Gold's going to continue to go up, and that's tied in with the dollar decline. So all of these trends that I've been talking about, they remain in place. And you know, folks, again, it goes back to MMT. It goes back to the understanding of policy. And of course, it goes to the mental game aspect, sticking with these trends over time. I mean, and then adding to positions, building up a sizable position in the direction of these fundamental trends that are dictated by conditions. It's not about some lines on a chart. It's not about overbought, oversold. It's not even about sentiment. I mean, sentiment is sometimes useful, but like, it's about basic conditions. Now my report has gone up. Some of you, I actually had a lot of sign-ups right before the end of the year. Congratulations. It's now at $500 a month. Ultimately, it's going to go to $1,250 a month. I see a lot of people griping that I charge. They want me to give it away for free. I mean, it's just like, listen, you have to become comfortable. Personally, you have to get comfortable with releasing, with investing in yourself, with spending. There's an infinite amount of money out there. Pretty much, relatively speaking, compared to what any one particular person has. There's like an infinite amount of money out there. Learn how to go out there and grab it. And one of the best ways I know to do that is to relinquish yourself of the money you are clinging on to, especially if it goes towards self-improvement, education, elevating yourself, knowledge. Then go out there and get more. That's the way, you know, you cannot, it's almost impossible to save your way to financial freedom. You need to be bold. And the way to be bold is to understand, this is like another mental game concept. The way to be bold is to understand that it's okay to relinquish whatever little money you have, because you can then go out there and get more. All right? So you invest in things that elevate yourself, and you free yourself from the fear of letting go to the little money that you have, because it's an infinite pool out there. You go out there and you take it. Learn how to take the money. Learn how to take the money. That's how you're going to get from here all the way up to there. Otherwise, it's just not going to happen. Hey, the first issue of the new year is out. MMT Trader. Go to my website. Sign up. pitbulleconomics.com. See everybody tomorrow. Bye-bye.